All right, good morning, everyone. I just want to welcome Ryan and Treza here this morning. They're here to talk about our RECO. They're not technically from RECO, though. I'll let them explain exactly what they do. Welcome this morning. Thank you so much for coming to speak to our office. I'm excited to have you guys here because it's a super important subject for us to sort of know what we're doing wrong and right and kind of answer our questions hopefully this morning. I already have one for you for the end of it. So, okay,
Oh, perfect.
continue.
Yeah.
Welcome.
And if you want to, if somebody wants to stop me at any time, I'll let me know if somebody's got their hand up in the room.
Sure.
If anybody wants to do so on Zoom, for sure we can stop along the way. We've got a presentation to cover. I'm going to go through it reasonably quickly so we can get to the Q&A at the end. And we're happy to stay on and answer your questions at the end. But if there's nothing else, I'll get started on the presentation.
Sure.
Okay, perfect. Sharing my screen. Oh, can you?
Yeah, I was just going to check. I'm like, did I make it so you could share it? There you go. You should be good now.
Okay, perfect. Okay.
Did that do it? Okay, good.
Should have.
Yep, there you go.
Okay, so can you guys see this insurance program with my cursor on it here?
Yes, we can.
Okay, great. Let's make sure you don't see the other screen, which has my notes on it. Anyway, so let's talk about the RECO insurance program. It's an errors and emissions program, but it has some more coverages. As mentioned at the top, we're from Alternative Risk Services. We are the program managers for the insurance program, which is administered by RECO. So we are not RECO, we're a separate entity. And we have an agreement with RECO to run the program for RECO. So if you ask us questions, if you send us claims, if you talk to us, you're not talking to RECO. And right out of the gate, I'm going to say that our process, the insurance claims process, is totally distinct and separate from the complaints process that RECO runs. We work in sort of the court system, and they have their own disciplinary system, and they're totally separate. So if you bring up any questions, it's not like I'm going to jot down your name and tell RECO that you asked that specific question or anything like that. In fact, to that point, we don't share specific claim information or claimant information with RECO. We only give them generalized statistics. The only reason we would share specific information is if you call RECO and say, I have a claim and I want you to find out what's going on with it, or I'm not happy with something. And then RECO will reach out to me, and I'll coordinate with Trasa and her team to say, okay, what's happening with this claim, and I advocate on your behalf. So that's the link we have with RECO. We do meet with them regularly. We do share stats. We do talk about policy issues and registrant concerns and all that stuff. We certainly talk to RECO almost on a daily basis, but we are not RECO. So let's carry on. So this quick disclaimer is just to say that the presentation is not to be distributed. It's meant for you as registrants. It is not meant for the public. It's not to be shared with clients or consumers. And specifically, any claim situation we talk about. So it says at all times the coverage applicable to any given situation will be determined by particular circumstances and allegations of the claim or potential claim. And at the risk of being pedantic and reading the whole thing, I'm just going to say what I'm saying is, I'll give you some examples of claims, and Trasa will share some examples of claims, but at the end of the day, every claim is a little bit different, and we have to apply the policy. And the policy itself is a contract. It's a legal binding contract. And if it says, thou shalt not cover this, then we can't cover that. And if it says this is covered, then we have to cover that. So there's really sort of like a black and white on most issues, and where it's gray, we tend to err on the side of providing coverage. But I'll talk about claim denials at the end of the presentation, because it's definitely a question people have in the back of their mind, that insurance companies just try and deny claims. So we'll talk about that at the end. So let's talk about your RECO policy and how it's structured out of the gate. First of all, it is one policy with three parts. Normally in person, I would ask, who in the room has read the policy? So can I ask who in the room has anybody read the policy? And I'm going to ask you in your room to say, does anybody read the policy cover to cover?
I don't think
I'm guessing no. Okay. So you pay every year for this policy. It's a tremendously valuable document. It's a tremendously valuable coverage. I really encourage you to read it, but I'm going to try and cover off all the things that I think are really important to know about it. But if you read it, you'll find that it starts with part A, errors and omissions. And that's the part everybody thinks about. I make a mistake, the client sues me, you give me coverage, right? So that's E&O. Then there's also consumer deposit and commission protection, which are parts B and C. And these are unique to RECO as being under an insurance policy. Consumer deposit covers your consumers' deposits held by the brokerage or any other registrant, um, in case they get stolen or the brokerage goes bankrupt or so on. Almost all the other provinces, I think every other province has a fund, like some kind of emergency fund for this, and it requires a fairly complex and difficult process to get your deposit paid because um, it's a fund of last resort. So after you've gone through every other effort, if you can't get your money, then you can apply to the fund and they'll pay. And lawyers like Law Pro, which insures Trasa as a lawyer, has a similar program, and it works that way, where it's a fund where you have to go through every effort to try and get it back, prove to them that you have, and then they might pay your claim. Versus this, where it's an insurance policy. If your money is missing, you file a claim, the insurer reviews your document, and if everything is in order, they pay. So it's pretty straightforward, and it's really, really nice to have that in this program. And then last one, which is unique to RECO and not available anywhere else in the country and not available anywhere else in North America, as far as I know, is the Commission Protection Program, which operates just like the consumer deposit, but for your commissions. So I'll dive into a little bit more detail on it, but the gist of it is, if the brokerage is holding your commissions and the brokerage goes bankrupt, or if somebody else owes you commissions, like from another brokerage, and they go bankrupt or they steal your money, or just use it for another purpose, then you can file a claim and have the insurance program assess whether or not they can pay that claim and get your commissions back. So that's a very unique coverage to RECO, doesn't exist anywhere else. So the RECO policy itself is a single policy with all the registrants attached to it. So you get at the sort of around about September, you get a receipt for your insurance payment along with a certificate of insurance. And your certificate is what binds you to the insurance policy and gives you your coverage. So it is actually a single policy, single signed piece like document that RECO has on file that ensures all, I've heard somebody say 60,000 registrants, it's actually 85,000 registrants. It insures all 85,000 registrants under a single policy. And the reason I bring that up is, one, the master policy with certificates option is incredibly efficient because you're not doing unique policies for everybody and underwriting everybody's separately. It's very efficient for us to get a certificate to you versus issue an entire policy. The coverage in it is specified under REBA 2002. So it says it has to be at least $1 million. It actually says you have to have at least 500,000, I think it's 500,000, could be $1 million now, of commission protection and consumer deposit. So that's actually right in the legislation. But the key thing here is it can't be customized. So one of the questions I get a lot of is, I'm starting to do property management, or I'm starting to do a different kind of business. Can I, like mortgage brokering or whatever the case might be, can I endorse the RECO policy to cover this new thing as well? And the answer is quite simply no, you can't. It is as it comes, but that makes it very, very efficient. So you can't add other coverages and activities to it. I will make a little side note. There are lots of people who would love for this to cover things like appraisals for the purposes of financing, because the RECO policy, notwithstanding the comments off the top, is significantly cheaper than pretty much every other errors and omissions program in Ontario. So there's lots of people who would love to figure out how to make their RECO coverage cover other things. So let's talk about who's who, because we mentioned that we're alternative risk services, we're not RECO. So where does RECO sit in it and who else is involved? The insureds are you guys. So you're the foundation. Without you, we wouldn't be here. So brokers, salespersons, and brokerages are the insureds under the policy, as is RECO, who is the named insured. So the policy at the top of it says named insured, Real Estate Council of Ontario. And then under the definition of insureds in the policy, you'll find all the various other people who are involved. So brokers, salespersons, and brokerages. Now, small side note, brokerages don't actually pay premium, and brokerages don't actually get a certificate of insurance, but they are covered under the policy. And the reason it's structured that way is without brokers and salespersons, brokerages wouldn't be able to do any professional services. So that's why it's structured that way. So if you were a brokerage with no salespeople, you wouldn't be a brokerage because you need at least one, right? You need a broker of record. So that's the way it's structured. There are other provinces where they charge the brokerage a nominal fee, but we haven't gone that route. The insurers are Lloyd's of London and Trisura Guarantee Insurance Company of Canada. So Trisura joined the program last year. For those, I know you guys do real estate every single day, and you know the ups and downs of the marketplace there. If you're not familiar with the insurance marketplace, we're going through a fairly difficult insurance market at the moment. And last year we had to bring a new carrier on for the first time in a long time, which was Trisura. So they joined the program. It used to just be Lloyd's. I will say behind Lloyd's, there's actually, and I think the number is 13 insurers. So Lloyd's is an insurance company on paper. Behind the scenes, it's actually a marketplace with a dynamic market of, I think, 150 various insurers behind that. So think of it like you go to Amazon and you buy a product. You don't buy it from Amazon. Amazon facilitates the purchase of the product. And behind the scenes, there are thousands upon thousands of different sellers behind the scenes. That's the way Lloyd's works. So while you've always seen Lloyd's on the policy and since 2004, it's been a varying mix of insurers over time. It was as little as 3 insurers behind the scenes back in 2007, and now it's up to 13. And then you have Trisura to make it 14. So there's a dynamic process, and we negotiate with them, and they have different shares and percentages. So it's fairly complicated behind the scenes. The program manager is us. We operate the insurance program on RECO's behalf. We are beholden to them for service and things like that to make sure that we're providing the best possible service. Any complaints go through RECO and cycle to us, although we'll take complaints directly if you like. We manage those with RECO's behalf. We have about 1, maybe 2 complaints a year, which when you think about the number of registrants and the number of claims we handle, which I'll get to in a minute, that's quite a good track record thus far. And last but not least, Claims Pro. Claims Pro is the insurance adjuster. So they are the separate adjusting agency that looks at your file on behalf of the insurer and assesses whether or not the claim is going to be covered. They bring in the documentation, they do initial research and so on. And then if necessary, they'll direct traffic with Trasa and her team's help to various defense counsels and so on. I'm watching Trasa on the screen here to make sure she's nodding and I'm not getting everything wrong. So, so Claims Pro plays an important part, and the people that work at Claims Pro, specifically Jan Perkins and Kathy Blandford, and their whole team, really, Lori Bardos as well. They've been working on the program for many, many years. They're absolute experts. If you've never had a claim, that's great. If you have had a claim, you've probably dealt with them. Highly professional, and they have such deep experience. Jan has been working on the program I think there was the hiatus for 3 years back in the early 2000s, but since the inception of the program. So you've got just a credible depth of experience there. So, and we'll talk about reporting claims in a moment. So first, let's dive into the errors and omissions coverage. Let's talk about what it does. It covers you for the mistakes that you might make, such as forgetting a key clause in the agreement to purchase and sale, making a mistake with respect to taxes, for example, using the wrong form, under or overpricing a property, incorrect representation of a material property fact, like waste collection, lot size, does it have parking, does it not have parking, etc. Or in reality, none of the above. Absolutely groundless accusations can lead to a claim. Somebody can think you did a bad job or forgot something and you really didn't, and they can sue you. And if they do, you're on the hook to defend it, whether it's true or not. So people say, well, if I'm such a great agent, I never ever make a mistake. All you need is one consumer client who has lots of time and money on their hands or feels that something went wrong in their favor, and they can sue you because there's nothing to stop them from suing you. So the insurance program is there to respond. You might be wondering, okay, well, how often do you defend claims where somebody doesn't make a mistake? And the reality is about 85% of claims never result in a payment of any kind. So a tremendous number of them just require some kind of response. Sometimes it's just the adjuster that's responding, and sometimes it's actually defense counsel. And sometimes we get reports from people. You get a nasty letter from a consumer, and you report the claim in an abundance of caution. We put a wait and see. We might give you some advice on how to respond, and it might go away and nothing will happen to it. So just wanted to let you know, the insurance program is not always being used by people who've made mistakes. In the large majority of the time, it's things where the consumer just feels like something didn't go their way, and hey, you were there, it must be your fault, and it wasn't. So we don't just pay everything. Coverage up to $1 million per claim and a maximum of $3 million per year. This is the amount of errors and omissions insurance that you have under your policy as an individual registrant. So, you know, any individual person with a certificate can have coverage up to $1 million per claim. And if in a really bad year you had 3 of those, you could have coverage for up to 3 million. Now, the really interesting thing about the policy here is that's actually for defense, but that's actually for damages only. It doesn't, that limit does not apply to legal defense costs or adjusting costs or any of the expenses involved. So if we spend $1 million defending your claim, you still have $1 million to pay out the damages that might be assessed. So if the court says, you know what, you were responsible for $1 million of their losses, you have to pay up. Even if we spent $1 million on defense separately, you would still have the million. So that's a huge value add. It is the way all policies work in the province of Quebec, but outside of Quebec, it's pretty atypical for us to see that type of structure. There's a deductible of $2,500, and it only applies, again, to the damages component. So if we spend $700,000 defending a claim, and at the end of the day, the court says, you know what, you're right, you didn't make a mistake, or you weren't responsible for that person's losses, and we don't pay any damages, you don't pay a dime, not a single bit of deductible, because ultimately we think that's the way to go. But that is also atypical for insurance policies. Typically, when you file a claim, you feel like, you know what, the clock is ticking, I'm going to start paying. I really want to stress here, there's no downside to reporting a claim unless we pay a damage or there's a settlement payment or something like that. You don't pay your deductible. Now, taking a beat there, I often get the question, how come everybody pays the same amount? I've never had a claim, and John has had a claim, or Susie's had 2 claims, and why should I pay the same as John and Susie? The reality is the deductible is the mechanism by which we make people pay for the use of the program. And that's why there's an increasing deductible. So each additional claim you have within a 3-year period, you're going to pay another $2,500 for each additional claim. So the first one's $2,500, the second one is $5,000, the third one is $7,500, and so on. There's no cap on it. That said, it is incredibly rare for people to have multiple claims. So it does not happen very often. But if you're wondering, why do I pay the same amount? This is the mechanism by which we make people pay more. And it works pretty effectively, because what increase am I going to apply to your premium? And if I apply a specific increase for usage of the program, it only makes the administration more difficult and more costly. So this is a really effective way to do it. And you should know that paying your deductible is considered an insurance amount owing. And if you have an outstanding deductible that you haven't paid and you said you would, RECO will be notified of that. That's one of the places where we will give RECO notice that there's a claim. We don't give them any of the details, but we say, so-and-so, John or Susie, have not paid their deductible, and you will not be able to renew your registration with RECO. So it sits as the same kind of payment as the premium. So if you don't pay it, you don't get to practice real estate. Coverage does extend to the broker. The brokerage has the same coverage as the individual who works for it. There are strange cases where it's just the brokerage that we cover, so it's not like there has to be a salesperson involved, but that's pretty rare. And typically the brokerage and the salesperson have aligned interests, and they get one defense. but sometimes we can separate it and provide two separate defenses. But we'll stop there and just take a moment, see if anybody has any other questions about errors and omissions, what it covers, any of the deductible or limit issues.
Say you forget a clause in an agreement and it affects you getting your commission because it's your fault. Would it cover that? We had an instance of that. So
Would it cover your commission? Well,
yeah.
so it has to be a claim. So did somebody sue you for you not getting a
No,
commission?
we ended it amicably. We ended up just, I guess, foregoing the commission because we couldn't see another way out. We didn't want to claim because the deal had gone back and forth. And at the very last moment, there was one clause about the HST rebate from the new builder, from like the builder, and it wasn't included. And then they said, well, if the buyer's going to claim that, we're out like 19,000. So we just sort of ate our commission. Just a question, like, could we have had some grounds to cover our own commissions if we had let that go?
No, I don't think so, because fundamentally insurance is about covering claims from other people against you,
yeah.
not you for making your own mistakes. So for example, it'd be akin to insuring, you know what, I made a mistake and I parked in a place where I wasn't supposed to park, and I got a ticket for $40. You couldn't buy insurance that paid your tickets for your own mistakes, for your own losses. Like, it's just,
I'm just thinking, because it's our error and then you're covering our commissions.
Yeah,
can we double up here somehow?
It's very similar to the question we got once where back when the anti-spam legislation came out, CAN-SPAM, I got an agent calling saying, do you cover that? And I said, no. And he said, well, I want coverage for that. And I said, how do you envision that working? If I pay all your fines and penalties for you breaking the rules on CAN-SPAM, why wouldn't you just break the rules all the time and have me pay all your fines and penalties? So I'm trying to you recall what the word is for. There's a word for it. I know, well, for starters, is anti-selection, but there's also there's a morality clause issue, a morality issue in that kind of coverage. So no, it wouldn't cover you for you making a mistake that puts you out of money because you haven't harmed somebody else. It really has to be the harm of somebody else. Now, if the brokerage had made a mistake on the documentation and the other side, say the cooperative brokerage, for example, didn't get their commissions as a result and sued you, there might be something in there for that, but it has to be a third party coming after you.
Sure. We have one question in here. Yes, Sarah.
Can you make claims against somebody where if you thought you weren't paid unfairly or something? Or I think this might actually be similar to Christine's question, because like
commission disputes, is that the issue?
Yeah, as in, like, if they just refusing to pay your commission and kind of just like taking a long time, and then meanwhile, like, it's like I got bills to pay and stuff, like I need money, I don't know, I'm young, so
I guess it has to be a reason if they're holding it up for an unreasonable reason, to overuse the word. Well, you know what I mean? Because
there is a nuance to that question. So if another brokerage is not paying your commissions, we don't ensure the timeliness, but if at the end of the day it seems like you're never going to get it, I would recommend that you file a commission protection claim, because another registrant, whether it's a brokerage or individual or whatever, another registrant holding your commissions, and you get the impression it might not be there, it's a bit tricky. I don't want to tell you it's covered for sure, but if at the end of the day the brokerage goes bankrupt, it would be covered. Or if at the end of the day they say we spent it, or you have some way to evidence that your commissions are not coming but they're due and owing, there might be coverage under commission protection. Under the errors and omissions side of things, there wouldn't be coverage for any kind of commission dispute. So I'll give you an example of a commission dispute issue. Let's say you worked with a client for 6 months, you showed them 1 million homes and so on, and at the exactly the 6-month mark, your buyer representation agreement is up. They find another agent, and the day after they buy a home, and that other agent gets a commission, and maybe it was a home you showed them, and it's like, okay, well, this seems really unfair. I did all the work and I'm not getting the commissions. In that scenario, if you go and you sue the buyer, your former buyer client, and then they countersue you, we could theoretically cover the countersuit, but we wouldn't because you brought it on yourself with a commission dispute issue. So we haven't got to the list of exclusions under the policy, which we will in 2 slides time.
But timeliness, you're saying, is not an issue. So for instance, like a lot of brokerages get held up because they're waiting for checks to come, balance of commission to come from lawyers. Say everything's in place and there's no reason for them not to be sending the commission to our office. Timeliness is not a matter in that case.
We don't ensure timeliness, so we're not like we're not a payday lender kind of organization. So if another brokerage doesn't give you commissions in a timely fashion, then we can't insure it, because for all intents and purposes, we don't have the right to go into their offices and demand they pay you and so on. As far as, unless there's some evidence that they no longer have your commission, it doesn't fit the definition of an occurrence under the policy. So just because they're slow doesn't mean that you're not going to get your money.
Like a year, for instance, and we wouldn't have.
Yeah, at some point, no, but at some point it becomes so absurd that it, that's why I suggest you should report that under the commission protection program, because at some point it might become kind of so absurd a time, like a wait, that it becomes clear that they don't have the money to pay you. Right. It's a red flag. And I would also say in this case, market forces, you should not use that brokerage. If they're consistently difficult in paying you, then avoid dealing with them. If they can't attract buyers because you won't bring them to them, then they're not going to have any clients. So that's probably the best mechanism to solve that problem in the longer term. But we can't cover for the timeliness because we don't have the ability to prove they don't have your money. And unless you have a document, you can say there's a contract it requires, and you go to the courts and the courts order them to pay and they still won't pay. In that case, we're a bit of a last resort, because once you can evidence they're not going to pay you, then we can. But if they just say, wait another month, wait another month, wait another month, there's nothing I can do to prove that they don't still have your funds. Trassa, do you want to chime in? Does that make sense to you too?
That makes complete sense. Yes. Yeah.
Okay. I try to pretend I know everything about the claims, but I'm still just an insurance broker. So that's the errors and omissions. Let's talk a bit about the actual errors and omissions claims process. Was there any other questions on that commission? We can circle back at the end and chat about it some more. I just want to get through the sort of the meat and potatoes of the presentation here. So this is the errors and omissions claims process. I know you're probably looking at the bottom of the screen thinking you can't see it, but I made a snazzy animation so it will fit. So this, I really want you to soak in on a couple points, and I'll bring them to your attention. The first one is, what triggers a claim is something that happens, some occurrence, some moment. You might recognize it, you might not. It could be, I said I'd send them that document and I didn't. It could be the client says, well, I'm really mad that happened that way, or those kinds of things are sort of those triggers, those moments where you might think, I should report a claim to the E&O. And what I really want to stress is there's no reason not to report a claim to the program. It's not like your premium's going to go up next year. It's not like you're going to get charged for the call or filling in the paperwork. The worst thing that will happen is that you will have to talk to the adjusters, and they'll ask you some good questions, and they might give you some guidance on how to avoid it turning into something worse. So that sounds great to me. So I don't know why you would not report a claim. So I really encourage you to report a claim. It's not like we're going to say, oh, so-and-so reports lots of claims, RECO. You should know that. Like I said off the top, we don't do that. So the only person who's going to know you reported a claim besides the program is you. So I really encourage you to report early. So if you notice something went wrong, you should report it as early as possible. And if nothing comes of it, then it will just die on the vine. You'll never receive a bill from us. There's no deductible to pay. It just goes away. That's great. You can smooth things over. If, for example, the client expresses some dissatisfaction in the way things are going, and you talk to the adjuster and say, what I'd like to do is, try and smooth things over by deducting some of my commission or so on, it's probably best to do that with the insurer's assistance, because one of the things the insurer can do is help you document that you made sort of a reparation with them. Let's say, and we've seen this a number of times, let's say you say, I'm going to, pay for the stove didn't work when you moved in. We should have checked that or whatever. And decide to pay for a new stove for the client. And they say, great. And you say, okay, are you totally happy with that? Is everything good? And they say, yeah. And you think, you know what, this problem's in my past. Nothing, unless you document it, has stopped them from coming back and saying, well, you know what, now the dishwasher's not working, right? And they can bring more and more stuff forward unless you document it. So one of the things the adjuster can do is help you to document that you've, kind of made a settlement, even though it's not really super formal. They can give you access to a release. Tress, I think we might get defense counsel to draft that up for you, right?
Yes, definitely.
Yeah. So if you try and make sort of a repair on an event, like you try and solve it yourself, it's best to do it with the insurer in tow, because it can actually compromise your coverage if you've said or done something that might compromise the later facts of your case. So for example, if you say, I'm going to pay to fix this problem, in some ways it might be construed as I've just admitted I did something wrong.
Yeah.
Right? In which case you've prejudiced the way we can handle the claim down the road. So best to chat through it with the adjusters. But if nothing comes of it, it will just be over. It'll just end. If it becomes an actual sort of legal claim against you, it will come in the form of a statement of claim. And a statement of claim is a very formal looking court document. It requires timely response. If you haven't already reported a claim, now is definitely the time to report a claim as soon as possible. And don't do anything until you speak with, when I say the insurer, I mean the claims adjuster. So they will take your claim file in. It's a form. You email it to them, and within 48 hours, I think it's 48 hours, they'll acknowledge it, they'll review it, and they'll get back to you. So you send the statement of claim to the program adjuster, you report the claim if you haven't already, and the adjuster's going to acknowledge it. And if it's warranted, they'll assign a lawyer. If it's a small enough thing, the adjusters can actually handle it themselves. But if it's anything over sort of $10,000 or $15,000, in all likelihood, they'll assign a lawyer to your case, and you'll work with the lawyer going forward. Your claim may be denied, and I'll circle back to denials if it does, because the policy simply doesn't cover that. So we talked about commission disputes being one of the things that we don't cover. There's a variety of other things we don't cover, which I'll talk about on the next slide. But it's possible you'll get a denial. It might be you have insurance elsewhere, like general liability coverage. But if not, it will carry forward. And one of the things, the second sort of signpost I want to draw your attention to, these claims take a really long time. Like if they're of any kind of meaningful amount, it's a really long process, and it can take years. And I'll give you a very brief example. We had a fellow who called me, and he said, I have a claim, and I don't think I should pay the deductible because there's another agent involved, and he made all the mistakes, so I shouldn't pay the deductible. And I said, oh, okay. And this was probably 2015 or 2013, something around there. And I said, oh, okay. What's your file number? And he says it was 2003-001 or whatever it was. And I said, 2003? I said, okay, we weren't the program manager at the time, but I do know the fellow who is. I'll give him a call. And so I gave him a call, and I said, hi, I just got a call from so-and-so. He says he feels he shouldn't pay the deductible. Is there anything you could tell me about this so I can feed it back? And he says, yeah, I can tell you we're in court right now. And he's sitting out in the hall right now. And we paid hundreds of thousands of dollars in defense. And no, he didn't do nothing. So anyways, they take forever. They take years and years and years. And a lot of defense costs and things happen in the background. And you will be called upon to provide a lot of input in terms of documents and come in for examinations for discovery. And if it all, if it all ends up in court, you'll have to go to court. So you'll spend a lot of time. Sometimes the time is good to you, and the other side just gives up and decides they don't want to bother with it anymore. And that might be the end of your claim. But the other two paths are your claim could be settled. And often people ask, how often do claims settle? Tressa, 95?
95% of the time, even more. Yeah.
Yeah. And the good thing about settling is that it's not public knowledge. If you go to court and you lose, it's public, like it's being published. So settlement is quite good. It's actually a necessary part of the process before you go to court in most jurisdictions.
Yeah.
Again, I'm treading on Trass's territory here.
Correct, yeah, yes.
Yeah, so most places have mandatory mediation or pre-trial, is that right?
Yeah, everywhere has pre-trials, but mediation is a step that isn't always taken. But sometimes, even if it's not mandatory, counsel often say, let's just do it anyway, because it can be very beneficial.
And if you decide you don't want to settle, you can talk to the defense counsel. The insurer does have the ability to force it, and if you don't like the outcome, you can appeal it through the arbitration process and the policy. But for the most part, that doesn't happen. Everybody's on the same page. You know what? I'm just glad this is done, and I can go back doing what I really do, which is sell houses or sell properties. So, so typically, most people are happy to just settle it and move on. If it does go to court, it can take a long time. The courts will assess what the damages and costs are, etc., and that will be the end of the process. So that's a big picture of the claims process. We won't take that much time on the other policies because, in all
You had a question? Did you have a question?
Yeah, I was just wondering, is there a statute of limitations, like, as in, like, how long this stuff, or like how long it takes to get expunged, or like, you know, like,
that is a good question.
It is a good question.
Trassa, do you want to field that one?
Sure. I mean, typically it's around 2 years from when the claim is discovered, kind of the discoverability principle. But there are so many mechanisms to extend that period that it's not always strictly adhered to. So even if something happened, 5 years in the past, if that issue is discovered only, so in present day, then it could be accepted. So it's really kind of a gray area. Technically 2 years, but it's fairly gray in that there are so many mechanisms to extend it.
Yeah. So if the example I'm thinking of, and Trassa, correct me if I'm off base, is say you sold a home 10 years ago, and all of a sudden that buyer discovers there's water in their basement today, and they think somehow you're to blame for it. They have up to 2 years from today to report the claim, like to make a claim. And what Trass is saying, they could even extend it further than that if there's reason to do that. And the courts are pretty sympathetic to consumers generally. So they might give them more time. So yes, technically there's a statute of limitations, but it's not a hard and fast thing. I think there's an absolute statute of limitations at 15 years. Is that right, Tressa? But it's not.
I've never seen it come into play.
Never seen it come into play. We definitely have claims that come out of the word work years later. And if you're asking the concern, and I can't see the person who asked the question, they don't sound like an older person, but
No.
if your concern is retirement or leaving the profession, remember I mentioned that there are constantly small changes to the policies. One of the changes we made 5 years ago is that we introduced coverage for retired professionals under the existing policy. So even if you don't pay, so if you left the profession 5 years ago, you're insured under the current policy, even though you left 5 years ago. That was a change we made to make sure that people could retire with confidence or leave the profession with confidence that this statute of limitations issue wasn't going to catch them 5-10 years down the road and wipe out their retirement savings. So you're automatically covered when you leave the profession for anything you did before you left the profession. Like if you've gone ahead and continued to practice real estate without a license, sorry, we don't cover that, but we do cover, any of the homes or whatever that you sold from before you left the profession. So you're automatically covered. It used to be 2 years automatic, and then you could buy up to 5, and then it was automatically 5, and then we said that's ridiculous. Let's just do it. Everybody's insured under the current policy. So as long as RECO keeps the policy going, you will have retiree coverage under the existing policy. It doesn't happen very often that we get retired agents claiming. So, any other questions on this?
yeah, I don't, I appreciate that, but I'm not sure if retirement is what I was referring to. I think I was more worried about whether it affects other claims. like, will it affect like future claims and stuff? Like, you know, what if it is, if it wasn't, let's say it wasn't a settlement, you did go to court, it was a public thing, and then now will it affect your future, like, you know, in a couple of years or something, if you make another mistake, or I don't like.
Oh, as an individual. So if you, like I said, the only impact it would have on you as an individual would be the deductible issue. So if you have multiple claims in the same year, now that if it's done and dusted in court and it's over, they can't reopen it. It's done. Right? And if you settle, there's all the documents, like I said at the top, you want your adjuster or your legal team to be drafting that release to say, okay, I'm paying you and that's it. Like, we're not reopening this issue. That's why it's so important you engage those folks to do it. So the same issue shouldn't come back to bite you again and again. The only impact it'll have is that if you had a settlement and you paid your deductible, the next claim you have within a 3-year period would have a deductible that's twice as big. Then your next deductible would be 5,000, not 25.
And you reset after the 3-year period.
You do, yeah. It works forwards and backwards in a very convoluted way. But so if you had a claim today, settle today, and then a new claim got reported and it was, no, you'd have to have a claim already in the works. So no, yeah, no.
Okay, thank you. Yeah, that's clarified.
It's a great question. Does that actually clarify your issue? Is your concern about how it would impact your coverage?
Yeah.
Yes,
Yeah.
thank you.
Yeah, okay, great. No, that's the only impact. You're still going to be covered. Subject to all the terms, conditions of the policy. Okay, any other questions on this? Or if not, I'll go on. I think we're running, we've got 10 minutes to cover quite a bit of ground. So before questions, but if you'll indulge me, I'll keep going and we can keep answering questions as we go. So what's not covered under the policy? Guess what? We don't cover actual crime. So if you're a fraudster, we're not going to cover you. That said, if you're an innocent party impacted by that, let's say you're the brokerage and you had no idea your agent was committing frauds, we would cover the brokerage. Or if you had a partner you were working with in a team kind of aspect and they were a fraudster, we would cover you. But we wouldn't cover them. We wouldn't pay their defense costs for being a criminal. Bodily injury and property damage are quite a thorny issue, and I really want to take a couple seconds to talk about that, because we cover up to $100,000 of bodily injury and property damage. It used to be just property damage for $25,000 many moons ago. Then we increased it to 50, and then we introduced bodily injury. Anyways, long-winded way of saying bodily injury and property damage are not typically, I mean, property damage you can see a little bit more in a real estate context, but bodily injury in particular, it's really hard to hurt somebody with real estate advice. With being a professional real estate, you don't typically have physical injury come from telling somebody the bones are good, or, hey, you know what, this room would look good, repainted and remodeled, this house has lots of potential. You don't usually cause people to fall down the stairs by giving them professional advice. They fall down the stairs because they're klutzy or the carpet was wrinkly or, you know, whatever the case might be. And then my point is saying is that typically bodily injury and property damage are covered under what's called the general liability policy or commercial general liability policy. This is really a big deal for registrants because most registrants do not realize that they don't have coverage for bodily injury and property damage at open houses and so on. They may, and I'm going to, ask RE/MAX ACE Realty staff to cover the earmuffs, because you need to check with your brokerage and make sure you're covered under their policy. And if you're not, then you need to go get your own, because their policy may have exclusions in it that negate coverage for you as the agent who's going around to different properties. If you're a subcontractor, for example, you might be excluded from their policy. They might buy a policy that has coverage only for their premises, so their offices. So if there's a slip and fall at one of your open houses and you're in the care, custody, control of that property, notwithstanding, it should be the homeowner. What we find is the homeowner insurers are suing the agents. So if it's off premises, it may not be covered. And the third piece is that we have actually seen real estate brokerages buy policies that exclude real estate services, which just seems crazy that an insurance broker would sell them to them, but we have seen it. So it's worth doing some due diligence. I'm going to put this task, Remax Ace Realty Inc., in checking with their insurance broker and advising the agents whether or not they are really covered off the premises of the brokerage. Check with the subcontractor issue, because this is a real issue. And I know at least one registrant has come out and openly told us she is $250,000 deep in legal costs defending herself and the brokerage for a really ridiculous claim for a slip and fall at a property she wasn't even at. Because like we said at the top, even if you're not to blame, it doesn't stop people from suing you, and it's very costly to defend these things. So we do have as much coverage as we can give you, given that it's not really a professional liability issue. We've been trying to shoehorn coverage in as best we can without making the price go up and up and up. But it's not the right tool for the job. So you really need to seek out a general liability policy. We've been working on a policy, and I'm not a salesperson, but I do provide solutions. And you can look somewhere else and talk to an insurance broker about it. But if you need a general liability policy, source one out. If not, go to reco-claims.ca. It's not there now because we're in the process of finalizing a new policy, but we'll have a solution for you that you can buy as an individual agent. So really driving home, this is important. The brokerage doesn't do it for you. You should do it for yourself. Anyways, let's park that one for a moment. We don't, it's in the exclusions because we say we don't cover it, and then we say, but we give you a little bit of it. That's the way it's worded in the policy, strange as that might sound, but we don't really cover bodily injury. And I'll stop one more time on this and say, if you're doing property management, technically the RECO policy covers property management type services, but it doesn't cover bodily injury and property damage related to houses that you're not transacting trade and real estate on. It's supposed to be incidental to the provision of real estate services, not a full-blown property management policy. And back to whether or not the RECO policy is cost effective. People would love for us to cover property management, because a property manager's policy is way more money than a RECO policy. So, okay, we don't cover appraisals for the purposes of financing. We do cover appraisals for all sorts of other reasons, like for estate planning and stuff like that, but we don't cover appraisals for the purposes of financing. We definitely don't cover it if you have one of the appraisal designations. So if you're doing appraisals for financing, you're not covered under this policy. You need to get a different policy. Commission disputes, getting back to that point about the commissions. If you incite a claim because of a commission dispute, the real wording in the policy is, any claim arising out of or related to a commission dispute, something along those lines. So if you sue your client for your commissions because you really felt you needed them and they countersue you, hey, that's normal course. People will, if you yell something at somebody, they're going to yell back at you. We may or may not cover that countersuit, depending on whether there's something like legitimate in that claim.
And I can't tell you how many times I've seen a countersuit just because they've been yelled at. Someone wants to yell back.
Yeah, you sue somebody, they're going to sue you right back. That's the first thing the lawyer is going to do. And they're going to say you did all sorts of bad things. So you're just inviting trouble upon yourself with doing that. Notwithstanding, you can do it. I'm just giving you risk management advice. And this is the difference between us and RECO. I will give you risk management advice and practice advice about minimizing your risk. It's not necessarily sort of RECO standard response on what you should do. And we'll get to that on the next slide for sure. So deposit disputes, we don't cover those. Now, this is a wink, wink, nudge, nudge. You guys are one of the few people to know that that particular exclusion is disappearing next year. So especially if you're a brokerage, it used to be that if you were caught in the middle of a deposit dispute between a seller and a buyer, you didn't have coverage under the RECO policy. Now you can file a claim and we will handle the legal services for you. It also impacts registrants who get named in it as well, and it creates a lot of stress, and we've removed it. So that is no longer going to be an exclusion starting September 1. Fines, penalties, and taxes. Like I said, we don't cover, get a parking ticket or CAN Spam Act. We don't cover any of those things. Those are, supposed to be the government's way of saying, hey, don't do that. And we don't cover you for that. Property management, again, it's excluded if it's too much of it, but the reality is it's not really a policy to cover property management in the first place. It's just here because We want to make sure that we cover. It sounds strange in saying it's an exclusion, but it says we don't cover it as if you're doing more than 35% property management with revenues, or the brokerage does more than 35% revenues. The takeaway today on property management is if you're doing property management, buy a property manager's policy. We don't cover mortgage brokering. There are lots of people from way back in the day who are, I think, dual licensed, if that's the right term for it. We don't cover the mortgage brokering stuff. Again, mortgage brokers will know that the policy costs a lot more on that side than this side. So we don't want to cover those claims. And the last one is the most asked one of all time, bar none. I have like a standard email template because I get so many of these. We do not cover claims related to properties or businesses you have a personal interest in. So that's an interesting point. Do you cover, like people ask, do you cover me if I sell my own home? And it says, we don't cover that, except if you disclose everything. So REBA says you can sell, you have to disclose your interest in a property if you're selling it or buying, right? So we do cover, let me start again. We cover you for selling your own property if you do all the right disclosures. And there's a bunch of them in REBA 2002 and its regulations. So we will cover you. Notwithstanding, lots of people think we don't, because way back in the day we didn't, but we do. The problem is you really shouldn't do that. Selling your own home is terribly risky because if a suit comes forward, you are going to get absolutely destroyed by the courts because you're a professional selling your own home. If you say, well, I didn't think I needed to tell them that important detail, the courts are going to totally not believe you. It's a really bad idea. So this is where if you ask RECO, they'll say, absolutely, you're allowed to do it. You just have to disclose. And the insurance policy reflects that and says it will cover you if you do. But I'm, as your insurance broker, saying, please, for the love of Pete, don't do that. Get somebody else in your shop to sell your home for you. You know, create an arrangement where you sell each other's properties, whatever you can do. Put some distance between you as the seller and you as a professional. Like, put some distance between those two roles, because claims involving personal interests are so much more difficult to manage. They're so much uglier. We had somebody who sold their own property. They claimed that the parking was legal. They had been parking there for years. The person bought the property. They parked on their parking pad. This was downtown Toronto, by the way. Paid on their parking pad, parked on their parking pad, and they got tickets. And they're like, what? I thought it was a legal parking spot. No, it wasn't. The person thought it wasn't, or lied, I'm not sure, and got $100,000 more on the price as a result of having parking. So technically we covered it because they did disclose it was their property, but then we sued them because they had us cover a claim that we shouldn't have covered. So we sued them as the seller. So you are two parties when you're selling your own property, a professional and a seller. And those two things are distinct and different, and the lines can get very blurred. But if you've taken one thing away from this, it is covered, yes. So don't tell fellow agents, because you've been through this course now. Don't tell fellow agents that it's not covered, but then definitely relate to them, but you shouldn't do it. Okay?
Sounds good. Sounds good.
Okay. Most common question by far. I heard somewhere that it's not covered. Yes, it is, but you shouldn't do it. So I'd love to say it's not, but it is. Consumer and anecdotally, the Alberta program, because we meet with the other provinces once a year, or we used to be pre-COVID. We meet with them and compare notes. When they found out we covered sale of your own property, the CEO of the Alberta program lost his mind. He's like, why would you do that? That's a terrible idea. But REBA says you can, so we do. Okay, consumer deposit. Let's run through this pretty quick. There's really one key takeaway here for you to take away and know in the back of your mind. First of all, it covers your consumer's deposits against a registrant becoming insolvent, theft, fraud, misappropriation, or wrongful conversion by a registrant. So if somebody takes a deposit in and then spends it on something else, or doesn't forward it where they're supposed to forward it, whatever the case might be, your consumer, your client, can submit a claim to the insurance program. It actually goes to RECO, not the adjuster. The adjuster will get it, but it goes through RECO so they can track these things. and get coverage for up to 100,000 per claim. Now, the 100,000 is an important thing. This is what I want you to take away. It's up to 100,000. So if your client wants to put a deposit down that's bigger than 100,000, take note that their coverage under your policy is only up to 100,000, and it's 100,000 for all of their transactions and deposits combined. So when it says per claim, it doesn't mean per transaction. It means per claim for lost money, which could be multiple transactions all gathered up into one. So they have a max of 100,000. If a brokerage went bankrupt, for example, and there was more than $3 million of lost deposits, this has never happened, but if it did, that would be capped, and the consumers would get a pro rata share of their 100,000. So there's a max of 3 million per event, per occurrence, and typically an occurrence means a brokerage bankruptcy. Social engineering fraud is an interesting coverage that's covered under the RECO program. Like I said, it's not covered like this anywhere else in the country, but social engineering fraud is definitely not something covered anywhere else. Social engineering fraud means your consumer is duped into sending their money, their deposit money, somewhere else. And we had it happen once where a consumer was duped into wiring $10,000 to a fraudulent account under the guise that it was the brokerage, and they fell for it. And there was no coverage at the time. And then when they asked them to transfer another $10,000, they caught on to the fact that this doesn't sound right. But that would now be covered for up to $25,000 per claim. And we have had a couple of claims of that nature where somebody posing as a registrant, as either the brokerage admin staff or the brokerage or the salesperson's assistant or whatever the case might be, duped a consumer into sending their deposit the wrong place. There's no deductible on this coverage for consumers. So they don't pay a deductible. They get their money back to the extent the policy can pay. Commission protection, you see how very similar these two slides are. The coverages are almost identical, except that now it's a registrant's commissions being protected rather than a consumer's deposits. A registrant's commissions would be paid up to 100,000 per claim. But again, all transactions combined. It's not per transaction. So if you have more than $100,000 with your brokerage, take note that your coverage would only cover you up to $100,000 of commissions in aggregate. That's not to say that this happens very often, that we get people with more than $100,000 of commissions that aren't paid by the program, because typically not all the commissions disappear, etc. But that's worth noting that if you have more than $100,000 with your brokerage, you should be paying attention to the brokerage's activities and so on. Again, RE/MAX Ace Realty Inc. This is not a specific comment about you guys in any way, shape, or form. Usually there are some red flags coming down the pipeline that there's problems at a brokerage before it goes bankrupt. Deferral of payments or bounced checks or whatever the case might be. Those are the kinds of red flags that mean, hey, it's time to call RECO or call the insurance adjuster and say, you know what, I've had this problem lately. Maybe you want to put it on your radar. Really important. Do you report those things earlier? It's not a prerequisite of coverage, but it's really important that you pay attention, especially if you have more than $100,000. Social engineering fraud is covered here as well. Let's say, this is really for brokerages. Let's say one brokerage seems to be calling you up and saying, we've changed our payment information. You send whatever commissions were due to the other brokerage. And it turns out that that was a fraudulent request for change of information. The important thing is pick up the phone, call and confirm any changes. And you should advise your clients. This goes to registrants, individual salespersons and brokers. Let your clients know that you will not be changing the process for paying deposits unless you specifically talk in person. Your voice is your most important passport to security in this kind of thing. So pick up the phone, make sure you have that personal relationship. Let them know you won't be changing payments. You won't be asking them for payments by email, etc. The deductible for commissions is $250 per claim. And again, a claim is not a transaction. A claim is the amount of money you lost in total. So you will only pay $250 for the total amount claimed. So let's say you lost 100,000 commissions. We would pay you $99,750 after the deductible. So, and it has happened. we do pay these claims. So other complementary coverages, like I mentioned, commercial general liability, super important. Cyber liability is becoming more and more important in this day and age. Although that said, you'd be really hard pressed to find it because the cyber liability insurance market is a gong show right now. Excess errors and emissions. If you feel like you need more insurance coverage than $1 million, and this is typically purchased by brokerages, but sometimes it can be purchased by individuals, you can buy excess errors and emissions. RECO's asked us to have a program since 2007. I'll be the only broker that it will tells you probably don't need an insurance product, but you probably don't. We very rarely have claims over the $1 million limit. It's really rare. So unless it helps you sleep at night or you're doing large, commercial transactions, you probably don't need it. And if you're thinking, well, I sell homes that are worth more than $1 million all the time, the reality is, even if the worst thing happens, typically the home still has lots of good value. Even if the basement has water in it, it's not $1 million problem to fix. So I'm not going to tell you that's a must-have, but it can help you sleep at night, or it can solve contractual issues. Crime insurance is something that brokerages will typically purchase. I can't see individuals buying it. It's for so the operational loss of monies, not the commissions and consumer deposit fees, which we do cover, and then the property management side of things. Property managers should have dedicated policies. So let's talk about the top 5 coverage of loss. We're running over time already. Is that okay? Is everybody sick of me yet? I'm sure we are, but you're probably too polite to tell me. But if you want me to cut it short at some point, we can totally do that. I'll run through these pretty rapid fire. Top 5 coverage loss: incomplete sales. So if a sale can't complete, sometimes it can be just as simple as the buyer saying, you know what, I'm not going to do it. I don't want to. I changed my mind, right? That can be very costly. About 12% of our more recent claims have come from incomplete sale. And a lot of these happened around April 2017. Some of you will probably recognize that date as being the day the real estate market changed, the real estate market changed, and it was really challenging for the program. Lots of incomplete sales, sellers, buyers who couldn't complete the transaction or didn't want to because the price had changed so rapidly. Property description is about 8%. You can see those aren't that expensive relative to the incomplete sale ones for us to manage. This is the cost in addition to the deductible that we pay on average. And that would be things like, square footage issues. You said it was 2,300 square feet and it's only 2,200 square feet and I want $100 more square feet. Typically those have been fairly easy to manage. Basements and foundations are big. Lots of leaky basements, lots of, foundations that aren't particularly sound and so on. If it looks like there's any concealment, you really want to make sure you get that home inspection. And I know that home inspection is almost a dirty word these days. Everyone wants to go in firm because the market's so hot and you probably can't get one. Make sure you document with buyers the risks of not getting a home inspection. Yeah, okay, maybe the advice is to waive it, but make sure you get something in writing from them that says, I told you what the risks are, you acknowledged and decided to move forward. Those will come back to bite you. Financial or mortgage. This is where, say, for example, back in April 2017, the price went down by $100,000 on a property. Now the bank won't give them the mortgage they thought they would. They said they would, and they can't close the transaction. So that would be a final mortgage. Very similar and often linked to incomplete sale, which is why the average costs are basically $4 apart. It's the same, generally about the same issue. And then property value can be quite expensive because typically these things can be, sort of land assembly issues, estate issues where, they think you should have got them more money or whatever the case might be. Those can be expensive because it's a hard dollar figure if it goes wrong. Trace, anything to add on these? I know we're running short on time and I've cut you off. But...
No, you've covered all the bases. Also, I'm happy to answer any questions if anyone has.
Okay, we'll do the questions at the end because I've only got, I think, 5 more slides, but only 4 of them are of any material substance. So changing values by transaction value. So somebody had mentioned, why does the insurance keep going up and up and up? Does anybody, I can't see you all, but does anyone throw their hands up and tell me what's happened to house prices since 2000?
Inflation, yeah.
Oh, they've gone up a little bit, haven't they? The reality is the claims we're handling back in 2000 when the program first started, almost 50% of them were for transactions of a value under $150,000. And now over 50% of them over 500,000. So you can see the top end value. So the transactions, the claims related to transactions of $1 million and up back in 2000, and now it's $1 million. So just think about average house price and you'll get a sense for how the values have changed and what kind of claims we're getting now versus what claims we were getting back in 2000. Very different. And I'll address the pricing issue at the end, and I'll give you a prediction that you can pretty much put in the bank about how the price is going to change over time. Okay, this is my last sort of fun piece, Mythbusters. Only new realtors make sense. Anybody had that discussion in the corner? Big claims only happened in the big city. Sometimes we used to get that, especially in the rural areas. And all the insurer does is try and deny claims. So the reality in the transactional stat, like of the stats that we have available, and this is not a perfect analysis, so a caveat is saying we did our best effort. We do collect how many years experience people have on the claim form. And using that data, we can see that you are most likely as an individual to have a claim between 15 and 25 years of experience. So if you have 0 to 5 years of experience, you have one of the lower claims incidence rates. Now, let me give you some context. There are a lot of people with less than 5 years of experience. And so we do get a lot of claims, but we're more likely to get a claim from somebody who's more seasoned. And that might sound incongruous to you, but the reality is, if you've been in the industry as long as that, it means you're probably pretty good. And if you're really good, then people are going to trust you with more transactions. They're going to trust you with the thornier deals, the more complicated deals, etc. And the reality is, if you've been around for 15 years, you probably have more transactions than other people. So you're more likely to make a mistake because you're doing more stuff. So yes, people with less experience make mistakes, but they aren't trusted with the same level of deals as people who've been around longer. This exact stat holds true for lawyers as well. Lawyers who've been around a long time do more stuff, have more clients, make more mistakes. So they can happen to anybody. So let's shut that down. The idea that new people, make tons of mistakes and they're the reason the program costs what it costs. That's not true. Big claims only happen in the big city. We have claims all over the province. We have lawyers, defense lawyers all over the province. We've had big claims in rural areas and we've had big claims in Toronto. And when I say big claims, I mean like the edging up on $1 million. One of our biggest claims was a vacant piece of land that just so happened to be a gas station back in the 1950s, but nobody thought to do a, environmental assessment. So it's not just, big multi-million-dollar homes in Toronto that cause big claims. All the insurer does is try and deny claims, patently untrue. In fact, this program is designed to try and find coverage for you. You have to buy it from us, so we better be working really hard to give you value for it. We deny roughly 7 out of every 100 claims. The bulk of them, as you can see, 50% of them relate to a deposit dispute. And like I said, and this is you guys and maybe one other brokerage that knows this already, that deposit dispute exclusion is disappearing starting September 1st. So this 7 out of every 100 claims is going to drop to 3.5. Commission dispute is a pretty big one. No covered allegations means you got a lawsuit against you, but it's not a professional issue. So it's not covered under this policy. And that finally is the end of the presentation. I'm so sorry I ran over, guys.
Oh, it's okay. It's good content for us for sure.
Yeah, and we love your questions. They're the very, very best part of the presentation.
There's one in the chat already. If you want to stop your share, I can just check and see if anybody's got their hands up or see who's in the chat there. Okay, so someone said, is it distancing if it's co-signed property? What do you mean when you're selling your own property?
Yeah.
Right? I guess when you were giving advice about selling your own property and distancing yourself, they're saying, is it distancing if it's co-signed? So it's not only in your name.
No, if you have an interest in it, and then if it's your spouse's property, you still have an interest, even if your name isn't on it. You know, if you have any kind of interest and it smells like you should know something about the property, like if it's your parents' home, for example, um, you know, those kinds of things reflect badly.
And then they were saying, is the disclosure form enough or we need something else?
If you follow the disclosure requirements, the disclosure form, we don't espouse any particular disclosure form, but I think OREA has one, right?
Yeah, we do.
If you fill that in, technically we can't deny coverage on that basis. What we will deny is coverage for you as a seller. So if they sue you for things as a seller, we're not covering that. You can submit that to your homeowner's insurer, and hopefully they'll cover that and not deny it on the basis that it was professional. And we might have a tug of war with the homeowner's policy. So if you're just the seller and not the professional, your homeowner's policy should cover you for a lot of things. But if you blend the two, like I said, it becomes very messy. And if they sue you for, you know, something that really is your actions as a seller, not as a professional, we won't be helping you. We can't. It's not in the policy.
How specific do we have to be? So a lot of people, I help them fill out their disclosures when they're doing deals around here, and they want to say, you know, I'm a registered real estate agent and I'm related to the seller. They don't necessarily want to say the seller's my husband or the seller's my cousin. Does it matter?
I can't help you with that. It does, the degree of that is not relevant to us.
I get asked that question a lot in the office.
Yeah. I don't know, Tressa, do you have any thoughts on it?
Does it matter?
So okay, pose your question again.
So a lot of people ask me when I'm saying, oh, you need a disclosure for this. They say, well, I don't want to put that it's my husband. I want to put I'm related to the seller.
Why do you not
Or
want to say
related
it's your
to the
husband? Just
person.
for privacy issues?
Yeah.
It's down for privacy? Okay.
I guess so. I'm not really sure what the issue is, but I get asked it a lot. That's why I just thought I'd throw it out there if it matters. How we do our disclosure. When we were disclosing we're related, are they going to pick on us that we didn't say what the relation was on our disclosures?
I mean, it's possible. This is a gray area, so it's always best, in my opinion, to be honest, as
Specific,
and specific as possible. This is not technically legal advice, but you know, going through the court system, it's really the best thing is to be as specific and honest as possible when you are disclosing something like interest. So.
If a claim comes out, let me just throw this out, and Tressa, you can see if you agree. If a claim comes out, how's the court going to read that? I'm related to them. Well, they're my husband, right? It's going to come out. They're going to ask you what your relationship is. Why didn't you just put husband?
It looks.
I mean, you could say privacy, and maybe that's the case, but you got to keep in mind there's going to be a coloring of the way people read it after that. So
it
just
lessen your credibility, lessen the honesty of how honest you look in the eyes of the court, that sort of thing.
Yeah, but that said, it doesn't matter to the insurance program. You've disclosed you have an interest in it. We don't care. We will care if we have to defend you in a claim. Like I said, we really don't recommend you do that.
For sure. So another question I got asked, I know we're going way over, just definitely because I got asked this specifically a couple of weeks ago. We had an agent in here. They had someone who really wanted to sign a listing with them, but they were hounding them to know if our insurance policy covers anything that happens to their property during showings, like if something gets stolen or broken or.
This gets back to there are elements of it that could be professional in nature. Like, for example, if you say, you know what, that really expensive vase would be great if you put it on the floor in the front hall. You know, it would look great there, like professionally speaking, and somebody kicks it over and it gets broken, then yes. But it really should fall under the domain of the general liability policy, because the reality is it's, you know, somebody walking through the house, any other professional may have the same exposure. Like the example I give when people say, well, I'm only there because I'm a professional. Well, a dentist is only at the dentist's office, and people only go to the dentist's office for dental work. But if somebody slips and falls in the front foyer, it's not the dentist's professional liability policy that pays, it's their office insurance that pays. So that's why there's that separate insurance type. So really should be that covers it. For things like stolen artifacts and things, the property damage component of the policy should cover it. But it's not a slam dunk because it only covers things that arise out of professional services. So I don't think really, without a general liability policy, you can't say 100% sure I buy coverage for that because you only cover a part of that.
Mhm. All right.
And their homeowner's policy should cover most of it. unless
Right.
they-
That's what I told them too. I said, tell them to check their homeowner's policy, tell them to put their valuables away if they're really that worried. You know, we try to take every
Yeah.
measure, but you know, every
Yeah,
now and then,
absolutely.
maybe someone has a little kid running
Document
around
that.
the mirror or something happens. So I just had a listing where someone opened the screen door and it just happened to decide to break right then and there, you know, because it was a really old door. So things just happen, right? Yeah.
We did have a consumer that sued an agent for, I think it was like $300,000 because they had their family stuff in a shoebox in the closet or something and it went missing. But how do you prove that it went missing? Like you can't prove it. So
Yeah.
it's not the right policy for this because you would have given them the advice to put the stuff away.
And document everything. So if you're giving them that advice, put it in writing, get them to sign it.
For
You know,
sure.
if they have all these valuables and they can be actually put somewhere else in a safe off site, they should do that. And they should already know that they should do that. But if your agent is going to advise them to do so, which
Mhm.
might be smart, then they should document.
For sure. Did anybody else online have any questions there?
I do want to address the pricing question. We had a fellow at the top that had some
Oh, he
points
did?
of view about the pricing. Yeah, somebody
What's the
said,
pricing?
why does the price keep going up? It's highway robbery.
Oh, yeah, I think that was Sebastian here. He said, why does it go up and up and up?
Oh,
yeah.
it's really good question. So, yes, it does keep going up and up and up. And the realities behind the scenes, there's a sort of a general sense of inflation in the price of the insurance that's driven by a couple of factors. One of them is the increasing house prices. Another one is just the increasingly litigious environment that we live in. Like the claims that we get now, Trassa, the claims we get today versus 10 years ago have so many more, allegations and stuff baked into them. Like people are just getting
Extremely litigious, and they'll blame you for everything in the kitchen sink. So they'll try it on. I'm not saying everyone does that, but there are quite a few out there, and you want to be protected.
So these are the things that drive, these are the things that drive the underlying cost. So at the end of the day, what are we here to do? We're here to pay your claims. So the policy pricing is actually driven by an actuarial exercise to determine what the price should be based on the cost of providing coverage for the claims. And then it's loaded up for administrative expenses and, to be blunt, profit for the insurer. They have to pay their investors, otherwise they're not going to be around. Now, they've paid out more claims in a year than all their costs, and they've lost money in a year. But on average, we shoot to provide a stable program for RECO, which is why your insurance goes up on average since 2010, about 4%. I think it's actually 3.5% a year. And the inflation rate for claims for realtors in the program is pegged, like generally on average is about 4%, 4.5%, something in and around there. So you can expect that the rate will go up by about 4% on average a year going forward, because it doesn't go down. It's not like we have fewer realtors. Now, if we have people making less mistakes or something like that, then yeah, we can see that going down. But the reality is that
going down. Why don't you keep it at the same level every year for 5 years and then move it up after 5 years, 4%?
that's a great, so we had that recommendation actually
Doesn't
from,
make any sense.
yeah,
People are not losing money, you're making money. If you were losing money, you would not be covering us, right? The realtors, right? In the long run.
no,
And the executive, they want money, more money. The executive who run Lloyd's of London.
that's a great question.
Come on.
Okay, I love it. I love the energy.
You don't fool me.
So
You don't fool me. You might fool
I don't know
people.
if it's going in Ryan's pocket.
That's
So
just
it
kidding.
doesn't go into my pocket, sir. No, no. The Lloyd, like the insurers do charge. They charge what they charge, but I can tell you it's actuarially driven for the claims experience that we have, and we charge you the price that we can negotiate with the insurers, but it's pretty darn close to the actual cost. Now, if you wanted me to stick the price and not change it for 5 years, I could charge you $50 more now and then wait for the price to catch up and then charge you $50
No,
more.
that's wrong.
But then I'm just giving profits to the insurer. I charge you what the price
I
is.
disagree with you.
I'm gonna give you Ryan's number. You can chat with him. Don't worry.
I'm happy to talk about this. I'm happy to show you the detail.
Yeah,
The CEO of
exactly.
Lloyd's of London, he retired,
Did
Mr.
he?
Hawaii,
Yeah,
the Portuguese guy,
I don't
where,
know. Yeah,
and he was offered 2.3 million, you know, like.
Nice.
Yeah.
you better go find a job like that then while you're a realtor.
2.3 million, the pounds,
Yeah.
English pounds.
Yeah.
Yeah, that's about
It's
maybe
a lot
$3
of
million.
money.
Well, just go ahead and check the Lloyd's of London financial statements. You tell me if they're making money.
Mr. Harora, the Portuguese CEO.
All right, we have everyone here. I'm sure I can give you guys, if we have any questions after, who do I direct them to? I guess I was talking to Jessica, I think, when I actually had questions. Is Jessica good?
Jessica often frequents, if you call our hotline, you'll typically get called back by Jessica. Depends on what the issue is. The reason why we take the message is, and we get them by email, and then we field them between us. So if you have questions, call the hotline and we'll figure out who's best to call you back. Typically it'd be Jessica, sometimes it's me. So one or the other of us, for the most part, answers the questions. You might get Azim Rematella as well within our office.
Very good. Thank you guys so much for all the good information. Hopefully you don't hear from us too much, but
you know what? We welcome. You can't call Tressa. We have her on loan from the claims team. She doesn't field day-to-day questions, but I do. So if you have any questions, you can give me a call and I'm happy to chat through things. Even if it's just a general insurance question. I'm an insurance broker. I'm not going to try and sell you a policy just because. I'm not here to sell you individual policies. What we do is run programs like RECO's. We're not a normal insurance brokerage that's trying to sell you everything, you know, all your insurance needs. But if you have a question about insuring yourself for something or how your insurance might work, think of us as a friendly resource as part of your RECO program.
That's awesome.
Antonio
Thank you
Orto
very
CEO.
oh, is he? Thank you very much. And we hope to see you guys again, maybe when you have some more information or if there are any changes in the near future. Awesome.
Sounds good.
Thank you so much,
Thank
Tracy.
you all.
Nice meeting you as well.
Thanks, everybody.
Take care. Thanks for your time.
Bye-bye. No problem. Thank you.
Bye.
Bye.